Well, hello. I'm Michael Terpin, and since everybody's tweeting up a storm here, it's at Michael Terpin, T-E-R-P-I-N, on Twitter. Again, I started BitAngels. I got into the Bitcoin world last May at the first Bitcoin Foundation conference. Thank you, Bitcoin Foundation, for introducing me. And Brock Pierce, who was on our last panel, actually sent me up there to launch one of his companies. And I just saw the little tiny 10 by 10 room, 10 by 10 booths, and said, wow, this is the internet in 1994. And it actually was in the same room that the first internet world in 1994 was in. And so I was like, okay, I've seen this movie before. And I obviously dove in, and now BitAngels has over 500 members in 30 different cities. And we looked at over 300 companies, and we've funded 14. Now, we're a decentralized group, so we don't usually lead. We don't do the term sheets. The angels do that. Brock's actually been one of our most active members. And you know, we've been in a number of different deals, including GoCoin, which is here, and a few other folks. So, so it's funny. The title is, you know, when is Wall Street going to get involved? The last panel showed that the VCs are on pace to do perhaps, you know, $500 million of investment this year in the space that they, you know, had zero investment 2 years ago and just a trickle last year. And you know, I like to think of angels and VCs as being the farm team for Wall Street, because they're obviously not putting money into companies unless they think there's an exit. And the exits, you know, all exits flow one way or another from what's happening on Wall Street. So, you know, if we weren't talking Bitcoins and you didn't have that on your resume for the last 2 years, I just look at your resumes and the top tier business schools and the Goldman Sachs and all that in your backgrounds and say, okay, these are traditional Wall Street guys, and now you're involved in Bitcoin. So I guess a couple of questions I'm going to ask is, where do you see on a scale of, since in many cases the bank part of Wall Street is still very skittish about it, on a scale of 1, meaning we're kind of looking at it, but it's not really something that we consider to be of any real importance, to 10, it's the most important part of our portfolio. Where are we on that scale of 1 to 10 right now? Where do you think we can be in, say, 3 to 5 years? And also kind of introduce yourselves and what your role is. Since it's a short panel, we will have time for that.
Do you want to take it?
You start first.
All right. Make sure I understand the question. Are you talking about the most important part of your portfolio, meaning?
No, meaning just Wall Street in general, right. not your personal portfolio. In other words, where's Wall Street on a scale of 1 to 10? 1 meaning we've kind of heard of it and we might look at it in a few years, to 10 meaning it's the most important part of what we're doing in our particular portfolio, asking that Wall Street person.
I don't know, 3.5, I'm going to throw out there.
That's aggressive, actually.
The way I would describe Wall Street, so I have a couple different hats to wear, but if you look at it from a hedge fund Wall Street perspective, or any institutional capital perspective that's not venture capital, the problem is that you have a product that is self-clearing, but it's not self-settling. And so what that means is you don't have a way to have a custody and a clearing of the trade all the way through like you normally would. So you can't call up a trader at any Wall Street firm. You can't do any kind of mechanism to easily own Bitcoin as a security, right? And so that's a really difficult headache. And so I think that the movement from it being a asset class that you can't own in a normal way, where it's custodied at a bank or some similar institution, is what's really holding Wall Street back, I think, from understanding this a little bit better, because realistically, you can't buy it and hold it. And so that, I think, when that shifts, you're going to be in a different position in terms of Wall Street.
Wouldn't say what Barry Silbert's doing with the Bitcoin fund that he's got, and some of what the Winklevi are going to do there. I mean, that sort of is a fund that you can buy as opposed to and have control over and buy and sell an entity.
In a way, but it's kind of the first generation. It's still relatively illiquid. They're partnerships. It's not something that you would be able to put on your sheets and see from your prime broker, manage the risk, and know that you can adjust. Right? There's holding periods. There's high fees. There's lockups. that's not an ideal product for what you would call conventional Wall Street capital. It doesn't mean that it's not ownable, because there are certainly many, I think, hedge funds and asset managers and family offices that own it. But the difference between going to be something that is more of a novelty to something that is highly liquid and widely owned means you have to bridge that gap. So there are interesting companies, I think, like for instance SolidX, that are working to create a way to essentially own Bitcoin like you would with a CFD. So a swap form, everyone understands how to use that on Wall Street, even though it might not be part of Main Street speak. And so there's just still this bridge where the fact that you have to custody the Bitcoins yourself is a significant pain point. And it's also a pain point not just because they have to learn how to do it, but more importantly, you have auditors, you have a fiduciary responsibility, you have to explain what happens. You can't just fire and forget. You can't say, I called up my trader, I said, buy me $10 million of Bitcoins, and the next day you see it on the sheet with all the rest of your positions. That can't happen today. If that could happen today, I think you'd be having a lot different discussion about Wall Street being, at somewhere like a 7 or an 8 or even a 9. Right? And so, but that's also what creates a lot of the opportunity, because in essence, the piping or the plumbing of the financial system, which may very well someday be replaced by Bitcoin, and that's a definite possibility, but you haven't even gotten to the point where Bitcoin is interfacing with the current financial system in a very easy and seamless way. And so that's where Wall Street, I think that's one of the things that's holding back Wall Street. Of course, there are other reasons too, but when you can't get past the logistics of owning it, you kind of get turned off to, should I spend time trying to figure this out, right? I mean, you have a million positions that you have to manage. Are you going to try and think about one that you can't even put on, right? I mean, you will, but not to a big extent.
Okay.
I think it's a little, well, I come from a foreign exchange background more than a equity background, but so I kind of choose to think about Bitcoin as a FX product. And while I agree with most of your points, I think that where Bitcoin resides within Wall Street entities, whether it's banks or investment banks, kind of dictates how they think about it. You can hold Bitcoin in the treasury group of Citibank if you really wanted to, but we don't have the wallet. They have to understand wallets. Like there are a lot of barriers to understand that from the treasury groups. But I would also say that, your 3.5, I pretty much agree with that. I might have even said it was a little less than that. And I've spent a lot of time talking to those kind of people. I'm also even on I'm on the board of a federally licensed U.S. bank, so it has nothing to do with Bitcoin. But I kind of get where the regulatory winds are blowing, so I spend a lot of time on the regulatory side. So my response might be that from a regulatory perspective, the smoke has to, blow through, and I don't think we're that far away from that. But when the regulatory side kind of gets a little bit more defined, doesn't have to be completely defined, but when there's a little less ambiguity about what these banks and investment banks can and can't do, the KYC and AML issues get a little bit more clarified. The BIT license, the New York BIT license, gets a little bit more defined. I mean, the BIT license has been talked about, but from my understanding, it hasn't even been, the formal applications haven't all been even received. That was announced 6 months ago, or maybe even more. It's not going fast enough, but regulatory-wise, it has to really take some further steps. But I don't see it as 5 years away. I see it as 18 months, maybe 24 months away. But that's when they'll start to really think about it. I talked to heads of capital markets at CSFB, and they're still afraid to even bring the topic up because they don't want their peers to think that they're crazy. So until they can kind of say, this is what the rules say, this is the asset, this is the opportunity, here's the trading opportunities, it's gonna take a little bit longer.
I'd put it a little bit over a 1 in my book, because I think a year ago we were a little bit under a 1. We were in like negative territory because a year ago you would get laughed at. I actually did, one of my first presentations that I did for BitAngels was to the New York Angels, which is a traditional angel group. And there's 50 people in the room, and they had just spent time listening to a woman pitch a bicycle monitoring app so you could see sort of like a Fitbit type of, and she was trying to raise $2 million. I didn't quite understand what she was trying to do with it, but the point is they were asking really serious questions and figuring out how quickly they get users and this and that to put $2 million into this bicycle monitoring app. And I'm telling you about a revolutionary, change the world currency and commodity that was, by the way, going for $70 a Bitcoin back during then. And I literally got stunned silence as if I was pitching Martian skin cream. And I asked if there were any questions, and not a single one, other than afterwards, a gentleman who identified himself as an economist from Princeton said, "Son, let me tell you, there's nothing good you come from Bitcoin. All it's good for is purchasing drugs, prostitution, and money laundering. Run away as fast as you can." That was a year ago.
Right.
So I think that I'm looking forward to my next speech there, because I'm going to sort of see a year later, if things have changed a little bit, and I suspect that they have. I guess I would challenge the assumption that you can't go and just buy, you said $10 million worth of Bitcoin. I mean, certainly you can buy 10,000 or 50,000, maybe not call a broker, you could call Harry, who was on a previous panel, and there's other places that basically will go in and have larger lots that you can buy without perhaps moving the market from people who do that. There's on local Bitcoins people who will sell you larger amounts. So perhaps it's not as easy to go and buy $10 million of Bitcoins, but it's certainly possible.
Right, I mean it is, but I mean if you think about how a Wall Street trading desk works,
yeah,
right? I mean you're talking about being able to see liquidity in the market. Mm-hmm. Trades print across on exchanges that are reliable and institutional grade, and none of that exists right now. And so, I mean, I think you make great points. Part of it has to do with the regulatory aspect, but I think a lot of it still has to do with the fact that the plumbing is not in place to allow that.
Don't you think that a lot of it, as far as Wall Street's concerned, simply comes down to volume and market cap? I mean, when you're looking at an $8 billion market cap, that's wildly bigger than it was, a year and a half ago when it was not even $1 billion. 2 years ago, it wasn't even 100 million. And the volume, Roger Ver, who spoke first today, he was telling me in Hong Kong a couple weeks ago that when he did his first CES, they had a little 10 by 10 for blockchain.info at CES, trying to explain to people what Bitcoin was in 2012, and they were showing real-time transactions on the blockchain. It took half a minute for one to come up. Now they're 4 per second. So obviously volume is a lot higher than it was, which usually tends to add to liquidity. And right now at 8 billion, it's still lower than the fine that BNP Paribas had, right? I mean, is it at 50 billion, 100 billion, 200 billion? Where all of a sudden does Wall Street think it's big enough to pay attention to?
Well, I mean, I think that you want to be the bigger the better when it comes to Wall Street. But $8 billion market cap is, that's a mid-sized cap stock, and they can be very liquid and very easy to trade, or they can be, illiquid and very hard to build positions. I think you would characterize Bitcoin as the latter. But
you don't build an exchange around one stock, and that's kind of the problem with Bitcoin. It's like thinking about building. Oh, would I build an exchange if I had one $8 billion stock to trade only? Okay, add a couple other minor alt currencies. It's still something that the idea of Bitcoin is something that's very far out there relative to where we are now. So, does the market have to be 50 billion? Maybe to get real trading volume, but I think some of the banks and Wall Street need to start thinking about it as a payment mechanism as much as a trading vehicle as well. And I think that's maybe when the banks wake up and they say, oh, the big banks who are running Visa or MasterCard businesses are going to start having to worry about different payment mechanisms like Bitcoin taking away from their wire or their ACH or things like that. So it might not just come from the trading side, but it might come dually from the payment side that the financial institutions are involved in as well.
Do you see with some of these bigger banks that there's a little bit of internal conflict when you've got, say, the trading side being interested and bullish long-term on Bitcoin, and perhaps the banking side seeing it as a fundamental threat, and they just want to say bad things about it and want it to slowly go away until they can figure out a way of sort of building building an iTunes layer of like, Visa coin?
Well, if you look at, Jamie Dimon's comments, which I looked at that, kind of like I looked at Warren Buffett's comments, like, if I could, have him in a room, I'd give him a piece of my mind. But yes, there's certainly a vested interest in the financial service side that wants it to go away. It's usually the old guard. I think that where these torches are being carried within the financial institutions and also the regulators is with the people, the younger people within those institutions that kind of get it. They're not afraid of it. They're not even afraid to ask the dumb questions. I think in your example of why everybody shut up when you were pitching that ideas, nobody wanted to ask the dumb questions in front of all their buddies or their peers. Bitcoin, unfortunately, is one of those things that it takes a while for it all to sink in. And unless you give it a lot of time to sink in, I know that's at least how it worked with me. It took me, didn't get it the first couple times I had a discussion involved. I actually got, talk about our backgrounds just a sec. I run a hedge fund. I run some mutual fund businesses. My background's foreign exchange and derivatives. I ran BNP's global foreign exchange and derivative business. I got involved in Bitcoin because one of my quant guys who was doing work on our quant commodity trading advisor came up to me and said 18 months ago, hey, there's this thing called Bitcoin. Can we invest in some servers and start mining it? And that's how we got involved in it, just because one of my younger guys introduced me. And then as that sunk in, we started to invest in it. We actually wound up mining Litecoin, not Bitcoin, because we could see the ASIC writing on the wall, and we didn't really want to go the ASIC chip route. But then that continuum takes a while to manifest itself. So mining, investing, market making, we're now, I would say, the only market maker in Bitcoin options in the world on Atlas ATS. So we kind of look for the option or the products and try to build businesses around those. As far as how Wall Street looks at it, Wall Street might not enter it until it sees some liquidity and probably some consolidation in terms of all these exchanges and real pools of liquidity. You say, the most liquid exchange we have in the world is Bitstamp, and it trades 10,000, 15,000 Bitcoins a day. That's not enough for Wall Street to get involved. It's just not.
But see, I would slightly disagree in that I don't know if it's necessarily the liquidity that's the problem. The problem is that the interface of the current financial system and the Bitcoin ecosystem doesn't really exist. There's nowhere where you can custody your coins. When you think about how the DTC works, if you think about how products get cleared in the modern system, the modern financial system, the way, for better or for worse, things are rehypothecated and hypothecated, something that is great we don't have in Bitcoin, but nonetheless, the problem is that Wall Street is able to do all of that very easily right now, and you can't do that in the Bitcoin world.
Well, I think, look, one, you don't have to custody. A bank could actually find and understand a good wallet. But there are wallets, as a couple people mentioned, BitGo, that are going to become online available, institutional grade, that will not only custody multi-sig, and once the banks can embrace that, they don't necessarily have to feed it through a prime broker. I don't think we're going to need to see Bitcoin be fed through a prime brokerage system in order for Wall Street to adopt it.
So you just took over as CEO of itBit, and I've had Mr. Teo on panels before, and you're a traditional guy, not actually he's too, but what do you see a role for itBit and companies like it in this space?
Yeah, so that would
happen?
That'd be a slightly different perspective, which is that I don't think that there's an institutional quality exchange that currently exists. Certainly not one that's 100% compliant in every jurisdiction that it operates. And
partially because there's no regulators yet,
well,
right?
I mean, you know how if you want to operate in the United States, you know who you'd have to be regulated by. You're either a money transmitter.
But they won't regulate yet. So
depends on the state, yeah.
No, but I mean a nationally regulated, like a CFTC or an SEC. There is no governing body who can wave their wand and regulate you nationally. And there's part of the problem. We need regulators to step up to the plate, and that breaks. Imagine if the CFTC said, yes, we're the de facto regulator. You have to go through our process, and once you do, you're regulated. That would be a breakthrough given what we're dealing with now. And
do you see? I mean, within the last few years, we were able to get rid of the blue sky laws for raising capital for companies, so that you can go now and Part 1 of the Jobs Act, you don't have to go state by state to raise money. If you end up just using Part 1 of the Jobs Act, you can just simply say, I'm raising money from accredited investors only, and in theory, at some point, Part 2 is going to get passed, even though they've got loads of complications on that. Why shouldn't this be the case of Bitcoin? Why do you have to go state by state to get regulated as an exchange for a global currency commodity system?
Well, two quick things. One, regulation and MTLs are different, right? I mean, to get an MTL, you have to go 50 states. So that's different than getting an exchange, technically regulated. But these MTL laws are kind of archaic. I've actually had an audience with the working group for the national regulatory group that's working on Bitcoin, and kind of stated that we need a bit license that works nationally for the US. And hopefully, once this bit license process gets really understood and processes these applications, I'm hoping that all 50 states say, yes, we'll go with that as long as you go through this bit license process. You don't have to go through the 50 states.
Fully compliant U.S. exchange by the end of the year, yes or no?
No.
Really? And your thoughts? Fully compliant U.S. exchange by the end of the year. We've got 5 or 6 companies already in the process trying to make it happen.
In all 50 states? TBD.
Even in some of the top states, in other words, fully compliant, like someone in New York or California could go in and I know you can.
Yes.
Okay.
Okay, well, if it depends on the bit license, right? If that actually gets processed and they follow through with that by the end of the year, then it will. But that making all these exchanges go to apply for MTLs for all 50 states, that's something that is a kind of non-starter.
Okay, so since it's a short panel, I'm going to ask a few things and get your opinions of them in terms of, are these exciting and going to develop quickly, or are they just dead on arrival? ETFs for Bitcoin.
We're going to have an ETF listed on a national exchange by the end of the year. And that's going to be a big catalyst, I believe. Winklevoss Trust I believe will be listed and traded by the end of the year.
And they have to buy Bitcoins as people are buying the
And we actually hope to be the main market maker on the options on that, and an authorized participant to supply them with Bitcoin.
I mean, there's been a lot. I mean, Vinny Lingham from Gift has talked about this a lot, and some others, how even though people are saying, oh, we need more adoption of merchants for Bitcoin, the net effect of us going from, say, 4,000 or 5,000 to over 100,000 merchants in the last year has actually depressed the price, because it's essentially most of them just sell into fiat. Expedia alone is a huge seller, 100% into fiat.
And that's got to change too. They have to be willing, like Overstock does. I think Overstock said they keep 10%. That's got to go to 30 or 40. And they'll just do that by understanding that they'll start out with 0 and they'll say, hey, this isn't that risky. And then it'll go to 20%, and then they'll go to 40. Eventually they'll treat it like
I think it'll also happen if they're keeping it 100% in cash and they've got substantial amounts in high profit products. I mean, with low profit products it's tough, right? But if you're in a higher profit product and you keep 100% in cash, and you look and say, wow, Bitcoin doubled over the last 4 months. Imagine if I'd taken even 10%.
Right.
Go ahead.
And they don't have to pay the transaction fees.
Family offices and sovereign wealth. Are they going to get into Bitcoin, and when? Because they obviously could, triple the volume in like a day.
I think family offices already are involved. Yeah. Sovereign wealth funds may very well be involved. I think it comes down again to just the continual adoption curve. They're able, I think, more easily than, say, Wall Street, as you would typically call it, to own Bitcoin, because they can custody it themselves, they're buying and they're holding, and they have a different type of fiduciary responsibility from a bank an investment bank, someone who's running third-party capital. So a family office, a sovereign wealth fund, they're in a little bit of a different position to be able to own Bitcoins, even in this early days. I think that's just a big deal.
Before the government auction results were announced and Tim Draper was announced the winner, I was betting that it was a sovereign wealth fund, because I know of some that are looking, and for a sovereign wealth fund, it's a drop in the bucket.
So we've got about 5 minutes left for questions. I'm going to turn it over to the audience. And just put up your hands, and the gentleman with the microphone's over there. Anybody has questions? We have to have some questions for this panel. Am I missing any hands? Questions? I'm happy to ask another question if nobody in the audience. Boy, it's been a long time since I had no questions.
Oh, we got one right here.
Did you see one? Am I just missing one here over there? I've got the lights in my eyes
over there.
Okay, great.
And then,
Sorry.
He's
great.
Standing up.
You then.
Oh, okay.
Hi, Aaron Kaplan. Do you think that MSB is going to be the standard route that companies are going to go through, like Coinbase, or will it end up being an SEC or CFTC regulated thing?
I think it just depends on timing. So if you want to do it right now, you're going to have to get a money transmission license. But I think inevitably there'll be some kind of federal standard that eventually gets set for the group overall, but for all 50 states. But I think that from what I can tell, we're probably at least 6 months, maybe 12 months away from some kind of federal standard being set. There isn't a regulator that's really stepped up and said they want to take it. The CFTC is doing, from what we can understand, they're exploring what's going on. The SEC is exploring what's going on. It doesn't neatly fit into any category. The Federal Reserve is spending time trying to understand it. Yeah, I think that's Washington speak for we'll get around to it in a later date than right now. So that means you're de facto left with money transmission licensing as the way that you can operate. I think Coinbase has I'm not exactly sure how they interpol versus the money transmission licenses, but I think they have some way of operating that allows them not to, I think, have those licenses at the moment.
Yes.
Do you guys think that Bitcoin has the potential to shake up the world financial centers in the sense that it may not just be New York and London and Tokyo anymore who manage the exchanges and do a lot of the Bitcoin work? Do you think it gives a chance to other countries and other places, other geographies to become big financial centers, or is that unlikely to happen?
Let's say, where will Slovenia fit in this if Bitcoins are worth 10,000 apiece?
I don't think it will make a difference. It's still New York, London.
Yeah, it's where the
Hong
money
Kong,
is,
and
right?
Singapore.
Is the money, the real capital, going to be anywhere else? And obviously the risk-taking capital is centered in those, especially look at the venture money too. It's still all in the U.S., unfortunately. But
I think the chance for Bitcoin to change the way the plumbing of the financial system works is enormous. And so there could be a large amount of change in terms of what leading financial institutions look like, how information and value is moved. Really, at the end of the day, there's no reason why it should cost so much and be such a friction to move information, which is what money is. And Bitcoin solves a lot of those problems, but it's going to just take time for it to work its way through the system. Part of what I was describing in terms of what I perceive as one of the problems from Wall Street adopting it has to do with custody. And the ability for Bitcoin to become the rails and the plumbing of the financial system is absolutely enormous, but that's over time. It's an evolution, and you can move a very significant amount of friction. And so you could very well see major financial institutions significantly change between now and a more ubiquitous adoption of the Bitcoin protocol, not necessarily Bitcoins.
I'm going to ask the last question since we've only got about 40 seconds left. Assuming that the ETF goes through and a fully compliant exchange is at least in a couple of big states, price of Bitcoin at the end of the year and end of 3 years?
1850 end of the year.
Okay.
I hope you're right. I was going to say end of the year 1,200, in 3 years 3,000.
Conservative by some standards. In 3 years?
I think we add another 0.
Okay. Great.
I hope you're right.
Thank you very much.